Hey guys, Uncle Ray. Welcome to another episode of the Crypto Bellwether. The founder of IOTA was quoted by saying, if you don't understand tokenomics, you don't understand crypto. And I 100% agree. Now, I normally don't give financial advice, but this statement is financial advice. You need to do a deep dive and learn everything there is to know, have a full understanding about tokenomics. And if you do, it will help you in a lot of different ways. And we're going to go over the 10 ways that tokenomics can help you have a better understanding and keep you from getting wrecked, but give you a better grasp of when to get in and out and whether you want to have a long-term hold or whatever. That's what we're going to dive into in this video. Now on this channel, we cut through the hype and the noise and we give you the non-biased information you can use. And guys, you can use this information. Now hit that like button and let's dive into it. The first thing that you need to know about tokenomics is once you understand it, it can help tell you when to buy and sell, or better yet, when to not buy and sell a particular project. And these other bullet points are going to help make that make sense. For instance, guys, if we're in a bull market, you can handle a high inflation rate, which is the second thing you need to understand. The inflation rate of any project. Think about it, guys. Projects like Avalanche have like a 24% inflation rate. Well, that basically means you've got to grow by 28% or 24% to just stay level throughout the year. It's like, imagine the Fed printing 24% more money every year. You got to grow your income by 24% to keep up with the cost of living. Now, in a bear market, that is not going to be sustainable. So it tells you that the market is going to keep dropping, and it's going to have a lot of good news to not continue to drop in a bear market. Now in a bull market, it tells you that no matter how hard it's pumping, when it's all said and done, it's going to have a massive pullback, which guarantees, guys, hear me out, if you're thinking about hodling some of these tokens for 5 or 10 years and they have bad tokenomics, until they get fully diluted, you can almost guarantee that those projects are going to be cyclical in nature. They are going to pump just like they have been the history of crypto for 18 months, 2 years, whatever. Then they're going to start to dump and dump and dump, go sideways and start that cycle over again. Well, guys, that has to happen because no matter what happens, these projects are not stocks, and they are not going to act like stocks for a long, long time. And the worse the tokenomics, the longer it's going to be before you can get a project that, let's just say, no matter what project it is, it goes from $1 to $10 to $100 to $150, then it crashes back down, right, and goes back down to 20 bucks. Well, for that to stop, you're going to need tokenomics like Bitcoin, Ethereum, or Quant, right? You can't get dumped on. It has very low inflation rate, if any at all. So those projects are going to be the first ones to ever get to an all-time high and only pull back, let's just say 20% in a bear market, kind of like a stock. But the ones that have bad tokenomics and the circulating supply is really low, like, let's say you have 300 million tokens out there, but you have 1 billion token limit. Well, guys, that's a lot of projects or a lot of tokens that are going to just keep flooding the market over the years. Now, another thing that you can get from the project is kind of the character of the founders. Now, this is not an insult and talking bad about the character of any of these projects, but when you look at how the tokenomics are set up, it tells you that foundation or that corporation or whatever it is, especially if it's corporation, it tells you if they are all about their community or if they're all about them making money and meeting their agendas. And there's nothing wrong with that, guys. But if you see projects like Avalanche, ApeCoin, APTOS, Ripple, when you look at how their tokenomics are set up, those projects, and there's many, many, many more, are set up to make the early investors, the founders, the developers, a ton of money. And if they're corporations, they're just using their token to make them money as an asset. And there's nothing wrong with that. And if you understand that, you can capitalize and try to run with them, but don't expect that they're doing things to help me and you make money. Now, when you look at the tokenomics and when you go to websites like Masari.io, guys, you can punch up any token and it shows you how many tokens have been added to the supply since inception, whether it was 3 months ago or yesterday. And that is something you need to understand. Now, you can also go to you can go to Token Unlocks, and it tells you a wealth of information. Now, follow along with this, guys. I've been looking to buy more Singularity Net. I went to Masari, like I just showed you, and then you go to Token Unlocks, and you'll see that in 4 days, 1 hour, 44 minutes, and 18 seconds, they're going to unlock another 1.7 million tokens. Well, guys, if you go to the chart right now, Singularity Net is basically has been heading down since the first of the year, but it had that massive pump when AI got really hot. But if you look at this, guys, in the last 30 days, it's been falling. In the last week, it's still falling, but it looks like it may have found a bottom. Well, if you look at the 24-hour, it's going to tell you there's a good chance. A lot of people are going to read that and say the bottom's in. Maybe I should start stacking here. But if you know that in 4 days there's going to be another unlock that's pretty hefty, the odds are, in my opinion, the probability is that we're going to be able to, if we're looking to buy more Singularity Net, that it's probably going to go back and test this price right here. So why would I want to buy it when this small little pump or bounce off the bottom is probably going to reverse itself when you have that unlock? And see, that's this type of information tokenomics gives you. Now, I talked about how it's going to be cyclical in nature. But guys, here's another thing you don't understand. And I know we hear a lot of hyped up information about institutions are coming to certain projects, etc. And some of them will come into these projects to do trades. But look, if projects have bad tokenomics, you can almost guarantee not one institution or big hedge fund is going to stack that project for long terms. So, and that's okay. And how do I know that? Well, guys, institutions are what you call the smart money. Corporations are the smart money. Smart money doesn't put themselves in a position to get dumped on. Now, in all those projects I talked about, like ApeCoin and APTOS, the institutions, the VCs, the hedge funds, they were early investors. Guys, they do the dumping. They don't put themselves at risk. Now, they may step into a project short term because of the hype or whatever and move that token up. But the point of it is, when you hear institutions are buying any token, any project throughout, let's say, a bull run, you know there's going to be a lot of volatility at some point, and they are going to dump. They are not looking to hodl any project with bad tokenomics that they can get dumped on. So we need to know that. Now, another way you can use tokenomics is to understand market cap. And don't look at the price. Guys, price is really irrelevant. Like I hear a lot of times people go, well, if Bitcoin can get to 68,000, so-and-so token can definitely get to 5,000. Well, guys, Bitcoin has, 22 million tokens, max supply. Some of these projects have 100 billion, a trillion tokens. Guys, it's a big, big difference. So understand that the price is irrelevant. And then once you understand the tokenomics and how market cap works, you'll understand the law of large numbers. Now let me give you an example. Guys, the projects in the top 10, they can't pump but so hard. If you want a 100x, like none of those can pump 100x. They can't do it. If they're in the top 10, they're not going to pump 100x in this next bull run. Now, I trade bull run to bull run. I'm not talking about 10 or 20 years from now. But in the next bull run, you will not get a 100x out of a top 10 project. Well, how do I know that? Well, for one thing, it's the law of large numbers. If you start a business tomorrow, guys, in your first year, you do $1 million. Second year, you do $2 million. Third year, you do 3 or 4. Guys, you can grow like that, but after a certain point, when you get to 25, 50, $100 million company, you'll be happy just to not start to back up. Because you think about it, guys, to double a project, one of these tokens to do a 1 or 2x, from $500 million, that's not a big deal. But when you're coming from 5 billion or 500 billion, that is a huge number to double. So you need to understand that, and you get that from tokenomics. Now, another thing that it does, it helps you with price predictions. It's kind of the same thing. Guys, when you understand, the market cap and you start comparing, let's just say, to Bitcoin and Ethereum, guys, no matter what token it is, it would not be a wise decision to base your investment on any project outside of Ethereum having a bigger market cap than what Bitcoin has done or can do. It's just not going to happen. Anything's possible, but guys, I'm talking probabilities. So once you understand how to compare it, and you'll get that information from the tokenomics and market cap and understand how to do all that math, you'll understand how to give yourself reliable, consistent price points, price predictions that have a probability of maybe happening. Now, here's the last point that I think is one of the most important points. Guys, crypto is kind of crazy. It's the only investment I've personally ever been around in my life where people don't want to talk about the risk and the downside. When, I've been dealing with wealthy people ever since I got out of college, back when I was in worked for Bear Stearns, and I traded foreign currencies and things like that. I've been in real estate. Anytime you call any wealthy person, not even rich, wealthy person, and you pitch them on anything, they will tell you, look, that sounds great. Love the upside. What's my downside? And if you lie to those people or you sugarcoat it, you'll never hear from them again. But in crypto, no one seems to want to look at the downside, guys. There's 22,000 tokens. They all sound sexy. You need to consider the downside. Now, this last point that I'm talking about, what I like about it, guys, let me just tell you something. For example, if someone tells you, if you understand tokenomics, and then someone gives you a really ignorant number, you know that they're either ignorant or they have an agenda. Either way, I don't want to get my investment research from someone that is doing either one of those. And sometimes, guys, it's both. Now, I'm going to give you an example. The people that tell you, for instance, that XRP can hit 10,000, let me put that in ignorant perspective. If XRP hit 10,000 in the next bull run, that means it would be more, the Ripple supply would be worth more than Tesla, than Apple, than Microsoft, than Walmart, than Amazon, Delta Airlines. I could go on and on for about 25 major corporations. Did I say Tesla? Guys, combined. Now think about that, guys. It's virtually impossible. Now let's get it back down to real world. If I think the number is about $32 would make Ripple's supply and make Ripple more valuable than Apple. Apple took like 35 years to become the world's first trillion-dollar corporation, and you're telling me that a small up-and-coming company that is worth about 15 billion right now can jump to 3 trillion and be the most valuable corporation in the world? Guys, that's just at $32. So the point I'm making is, if you understand tokenomics, you're going to have people insult your intelligence constantly. But hey guys, that's good, because you know if they're insulting your intelligence, you don't need to listen to them, because you will not be successful getting misinformation. Anyway guys, that's all I got for you. Let me know what you think in the comment section, and if you like these type videos that educate you about tokenomics and you want to learn more and maybe learn to do some of the math, let me know. But I hope that you found it useful. If you did, hit that like button. But guys, either way, come back and be part of this community, because I can't be more bullish. You got to get good information. But guys, in this next bull run, I truly believe that this is the best time in history for the average person to change their financial destiny. And it starts with real non-biased information. You got to get both sides of the story. You got to get your risk reward. And one last thing I'll say, I don't know if I mentioned it, but guys, when you understand the tokenomics and how you're going to get dumped on if a project has bad tokenomics, you might not want to hold something for 5, 8, 10 years, because no matter what, you're going to write it up, write it way back down, write it up, write it way back down, and there's an opportunity cost that you lose during that time. And you could have been a lot better off if you'd have just bought, say, Bitcoin and Ethereum, wrote it up, took profits, started over again, and by the time your third bull run, just with those low risk reward projects, you've been way better off. And there's a good chance, guys, the way technology is changing every single day, I truly believe that 90% at least, if not 98% of all tokens are going to disappear in, let's say, the next 10 years. I don't know when, but guys, the technology like Venmo and Cash Out, PayPal, and I don't know how all that works, but if you look at it, I just got a notice on my Venmo, I can buy Bitcoin, I think Bitcoin Cash and Ethereum and one other. They don't use blockchain. And JP Morgan and all the legacy banks are talking about not using tokens. They're talking about using smart contracts, NFTs, and ledgers. For whatever that's worth, guys. So hodling, I don't know if that's a good way. I personally go bull run. That's what I teach in my coaching. And I think that's the best way to go. Anyway, guys, that's all I got for you guys. Take care.